you guys just raised a Series C, and you had a nice chart. Maybe you could share your chart with us.
Yeah, could I do that?
Yes, please do.
There it is.
There it is. And it's funding rounds explained. So this is a chart that says pre-seed, seed, Series A, Series B, and Series C. And why don't you explain what each one of these is briefly? I know I won't have you for very long today. So,
so with OneRail, I'll kind of take you on the OneRail journey. Our pre-seed funding was exactly $2 million, and it came from angel investors, friends, family. I call that the Shark Tank round. And so you're out there peddling really yourself. I mean, they're investing in you. They're investing in the idea. At that point, it's really an idea. You've done a little bit of testing. In our case, we did a few $100,000 of revenue as a tech connected courier under that phase. But you haven't really proven yet you have something that'll scale at all. So then you get your seed financing. Ours was led by La Solis Venture Capital. With participation from Chicago Ventures and Alpine Meridian. We raised about $3.8 million in our seed round, plus, the $2 million from pre-seed. So I think it shows 5.8 on Crunchbase. But at that point, we had our first commercial contract with American Tire Distributors. We also were doing some work with Menards. So that was really what we would call our market entry, our first sales as OneRail. And that was about a $5.8 million round. Then our Series A came about a year and a half later. It was led by Iron Spring. And at that point, there needs to be really good product market fit, enough to say this business will scale to become a growth stage company. And at that point, we were doing, I think we might have done $9 million in revenue that year. Iron Spring took a chance on us before we had really proven yet that we could have repeatable SaaS growth with our software product. Most of our revenue at that point was coming from transportation. So we were in the early phases, of building out our an operationalized sales team and maturing some of the processes in the business. That was a $9 million Series A. It was small given the time period. There was a lot of crazy Series A's in 2021. I'm really grateful that we raised a reasonably sized round, because that really helped us as the markets, had a negative impact, in 2022 and 2023, as they were negatively impacted by the interest rates. We didn't overraise. We raised the right amount of capital. When you get into Series B, that's a whole different world. And there's a lot of companies that don't make the jump from A to B. There's a lot of companies that either sell and exit at Series A, or, they cease to operate, or they kind of become what I call a zombie company. They sort of operate at low growth. We were fortunate, we were growing by hundreds of percents year over year. And our Series B came about a year after our A, and that was a $33 million Series B. It was co-led by PIVA and Arsenal Growth Equity, and PIVA Capital. And at that point, you really have to have demonstrated product market fit. You have to demonstrate that unit economics are favorable. Your unit economics aren't under as much scrutiny in the seed and Series A. They really come under scrutiny in Series B. It's really around where you mature some of the roles in the company, like CFO, CRO. In some cases, you'll hire an EVP of people operations because you're going to do so much hiring. We were fortunate. We grew about 300% from our Series B to our Series C in a 2-year period. And we just raised our Series C. It was a $42 million round led by Alamut Capital. And at that, Series C is kind of like Series B on steroids, right? You more scrutiny. You have to demonstrate you have durability in your customer.
It's extremely rare to get to Series C. Am I right to say that?
It's 1 in 10,000 from my calculations, or at least the research I've done. But I think what's important to point out, Joe, McKinsey released some data in July that logistics and supply chain tech sector is down 90% in terms of growth equity and venture capital in a 24-month period. So that's pretty big, right? Between
Yeah, yeah,
between
yeah.
between 2022 and 2024, it's down 90%. So to not only raise a Series C, but raise it in that period, it says a lot about our team. It says a lot about I think our solution, and it certainly says a lot about our customers and investors. Like, we have a solution that's really generating value, and it's doing it in such a way that there's positive unit economics. We're solving a real problem.